The 3 fund all-purpose portfolio. I'm going to sit back and show you guys how you could build a portfolio with just 3 funds for all purpose. But stay tuned. Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned in to the Investing Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button, and check out the description box to follow us on our other platforms, support our books, our Patreons, all the other great stuff. But as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So the world of investing gets so convoluted. You don't know what to buy. It's so much stuff out there and everything else like that. So I made this video to show you how you can buy essentially 3 funds to pretty much make your portfolio. Now, here it is. The market moves in 4 cycles. We all know that. You have a trough, which is the bottom. Then you go into an expansion. And then you go into a peak. Then from your peak, you fall down into a recession, back into a trough, right? So you got to ask yourself, how can I make money in all 4 cycles? Now, I will say this portfolio is sponsored by my reading. It's not sponsored, but it is influenced by my readings of Ray Dalio, Principles, All-Weather Portfolio, and also the great Warren Buffett, right? So how can I make money in all portfolios? I mean, not all portfolios, but in all markets. So in the trough, what's happening in the trough? The market is down. The market is probably just came out of recession, and you're probably the government is trying to get the market back up. What does well during that time? When the market is uncertain, you're probably going to have things like gold, and you're probably going to have things like bonds that are probably people are going to run to because they're going to be more secure. So first thing is adding long-term bonds into a portfolio via an ETF to profit during a down market. Now, the next thing, and that's something you can achieve with an ILTB, a long-term bond ETF, right? That pays dividends. Some of them pay monthly dividends anyway. So even when the economy is down, you're constantly going to have cash flow coming in from the dividends. Now, when the economy goes into expansion, the government gets it all together. Back in 2009, that's what happened. When the government starts to crank it back up and we go into an expansion, unemployment starts to drop, stock market starts to rise. What is the best thing to have? Probably stocks. So what's the best way you can track stocks? We already know that's either through a index fund, S&P 500, maybe the Dow Jones or NASDAQ, but the most traditional one, S&P 500, that's going to get you the exposure to stocks via an expansion. Now we move off into a peak. So that means stocks are booming. That means bonds are not doing too well. That means gold is not doing too well neither, right? So, but your portfolio is killing it via the equities and stocks, right? Now, we move into a recession. What are the things that start to do good in a recession? Things that start to do good in a recession are gold and commodities. So how can we add gold and commodities, a gold ETF to our portfolio as well? So now, while we're in a trough, our bonds are making money. While we're in an expansion, we got our stocks making money. And while we're in a peak, we're peaking out with the stocks making money. Now when we start to go on a decline, we know that gold and commodities will start to do well. And then we hit back into the trough. So now we have a portfolio with just 3 funds, which is a long-term bond ETF, which is a gold ETF. And I threw in, you could do the S&P 500, but I threw in a total market. I threw in a total market ETF, which is a VTI by Vanguard, which means that it gets the markets around the globe, because some people like the international exposure. They want to go overseas, get the total market. They don't want to get just S&P 500, but you can get the total market, get exposed to the total market ETF, right? So now when the market is doing well, you have stocks in there. And I guarantee you, the hardest part about this is the asset allocation. That's going to be the most difficult part about this. Asset allocation is, how many stocks do I buy? How many bonds do I buy? How much gold do I buy? Now, I will say probably at least every 6 months to a year, you're going to have to rebalance. But here's a rule of thumb. 100 minus your age. I'm 35 years old. 100 minus my age is 65. So I would say 65% stocks, right? And if I put 65% in stocks, that means I have 35%. Hopefully my math is not wrong on that. 35% into to put in where else I want to put it, like into bonds and the ETFs. I'm into bonds and the gold, right? So because we know over the long term, stocks will outperform. U.S. economy stocks will outperform over the long term. Yes, they will have dips. Yes, we will have recessions. But we know over the long term that the stocks will probably going to outperform everything else. So I feel comfortable with doing a 65% at my age today to be exposed to stocks, even though I know a recession is coming and a crash is coming, and I've probably experienced a couple of them throughout my life. But I know every time we hit a bottom, we come back and we double the top. So that's one thing we're going to do. So it's to show you right here with these three funds, with all you guys out there, all you guys and girls, with all these stocks and reading all this stuff and Bitcoins and this and that, 95% of you guys won't beat a portfolio like this. Somebody can sit back and create a dummy portfolio like this and spank your butt up and down. You know, I got to keep it PG. Spank your butt up and down in the investing world. How can that happen? Because the less you know about investing, the better. Now, this doesn't negate and end all your investments, but this can give you a nice portfolio so you can walk off into real estate, you can walk off into business, maybe franchising, whatever you want to do. But when it comes down to this market, somebody can create a portfolio like this. And hold up, let me give another shout out. This portfolio is inspired by three people. Mr. Lars Kroger, his book is Investing Demystified. Ray Dalio, his book is Principles. And Mr. Warren Buffett, Snowball. These three people combined, it's kind of put me in this thought process. Now, theirs was a little bit better, but here's three funds to create an all-weather portfolio. Y'all drop some comments below and let me know what you guys and girls think. All right, until the next video, podcast, cartoon, and whatever else you see me do crazy around the globe. Peace, be safe, I'm out, and thank you.
Check out the latest installment of the multi-book series teaching kids about financial literacy. Wesley learns about insurance, guest starring Broncos Hall of Fame running back Terrell Davis, authored by Prince Dykes, teaching kids the real-life skill sets that matter as they grow older. The third book in the Father-Son Financial Literacy series gives a kid-friendly introduction into the world of insurance. Award-winning and recently stamped by Warren Buffett, available hardcover, paperback, ebook, and audio online at Amazon, iTunes, Audible, Barnes & Noble, Walmart.com, Tattered Books, and more. Hardcovers are only available at Lulu.com. Presented by Alpha One Tax and Wealth and Belco Credit Union.